The Nigeria equities market halted. The bearish sentiment advancing 0.1% today on the back of the policy decision by the Monetary Policy Committee, which kept lending rates at 27%. Ayodeji Ebo, the managing director of Optimus by Afrinvest, joins me now for a market discussion on the back of today's announcement. Thank you so much for joining us on the show today, Dr. Ebo. Let's get right into it now. What is this new SDF corridor of plus 50 minus 450 basis points around the MPR signal for you when we're looking at the CBN's monetary policy stance, orthodoxy framework, and then the expected near-term impact when we're looking at liquidity? How much influence do banks now have in terms of incentives to either pack liquidity with the CBN versus the lending to the real sector of the economy?
Okay, thank you very much. And I think the first thing I would say, it came as a surprise to me because I projected that there will be at least 50 basis point cuts. However, what this is saying is that the CBN still has a bit of concern, maybe over short-term inflation. If you see the month-on-month inflation rates, is when you compare October to September, it grew faster in October. So that may be a major concern to the CBN. And speaking directly to the question, so now from a symmetric corridor of plus or minus 250 basis point now to a symmetric corridor of minus 450 basis points plus 50 basis points, which means that that's around the SDF and SLF. So what we expect to see, what CBN is saying is, I want you to reduce funds that you place with me. So if you are enjoying so that's if you are enjoying 25%, almost 25% return on your money. If you place with me now, I'll be giving you about 22.5%. You know, by the time you subtract the 450 basis point, and also it's also making the lending also cheaper. So and it means that if you are borrowing money from the CBN, it will also, what is happening is that it's also now more expensive rather to also even borrow from the CBN, because when you also take the 50 basis points compared to 250 basis point that you take from the MPR. So it's just to signal that I don't just make cheap income, don't just make cheap return. Try to see how you also want to begin to intensify efforts in increasing risk assets towards the real sector. I think that's the signal that's getting from this decision that the CBN has made. So it becomes banks will begin to see, because when you look at from almost 400 basis points off what they used to make when they place funds with the CBN at 22%. So they begin to see what other areas can they cover up this 400 basis point cuts that has come suddenly on funds that have been assigned to place with the CBN. So which I think is also positive for the economy. They see the opportunities that where they can be able to, especially areas where at least they have competencies, because I always say for banks, they need to build competence in different sectors, and we channel more effort to those areas that you are more comfortable with.
Yes, and talking about how we should expect the market to move near term now, do you also expect the overnight rates to gravitate closer to the upper, lower end of the corridor in the next few weeks? And why would you say these moves would occur?
Okay, so I think we would see now that it's also more expensive to borrow from the CBN. So we think that we'll begin to see within the overnight rates begin to also move towards the CBN, toward the CBN rate, because banks would also try to increase the rate at which they also extend credits, short-term credits to themselves. So we'll see that short-term lending also increase even as we progress. But what the CBN still would persuade, because there's also a need to persuade banks to do is to see how they can channel more liquidity into the real sector.
And now let's also touch a little bit around the expectations around the yield curve as well too for the T-bills, OMO yields. Where do you expect these sharp movements and sentiments to also play out? And when we're looking at the strategies we should expect from institutional investors, how do you see them moving forward as the banks recalibrate their liquidity management strategies?
Okay, great. Now there would be like a mix trying to, when you look at available channels for funds, 22.5% you replace funds with the CBN now, compared to also OMO that is still over 25% yield that you get. So more demand for OMO rates, but I feel that the CBN would definitely not want the yield to go beyond this current level, if not bring it down. So with what has happened, what we only see the MPR now is just having as like a reference rate that does not actually have much impact on whatever happens in a fixed income. That's part of what has informed the expectation that CBN may want to bring the MPR to begin to lower, to begin to converge with what we are seeing within the fixed income space. Average yield on bonds, which is the longer dated instruments, around 16-17%. And you look at treasury bills, average of 18%. So we would think that rates will just typically continue within this space, and it will also reduce that expectation that we may see a major reduction in interest rates even in the interim beyond this current level. So for between now and the next MPC, we think that rates will just hover around this space, because when we also early in the year, as we see the new budget, you see the numbers, you see the financing gap, that is what will signal more direction, whether government will be aggressive to pack a lot of money at the beginning for them to be able to execute, or they would use other sources to finance the budget gap that we may see.
Yes, you've already touched on my next line of questioning, whether or not we are going to see further adjustments to the MPR and even looking at the liquidity management tools in the MPC's toolbox at this moment. But now let's talk about how much of support this would also provide for our Naira stability at this moment.
Okay, I think part of what the CBN is also looking at, OMO is what is more appealing to the foreign portfolio investors to create that liquidity. And they've kept that rate at very attractive rate, over 26%. Yeah, so I think they will still want to keep that. Yes, while we are seeing improved external reserves, but the CBN will want to ensure that there's a bit of stability. Now we have enjoyed, because by the end of this year, it will almost be a year of stability, despite the volatility that we saw. Since December was the last, was when the B-match Bloomberg system was introduced that created transparency and liquidity. So we think that CBN will want to ensure that they consolidate on that gains, which would also boost forecast. Business don't like uncertainty. With the stability we are seeing, we will see that businesses will also be able to do well in the new year, because they were able to project well, and if there's no unexpected fluctuations, then they will be able to deliver on their projections.
Yes, and talking about delivering and projections now, the CBN governor, just like the analysts we had on the show, clearly reiterated the need for us to be able to achieve stability when we are looking at price stability and also financial system stability. This definitely requires a better balance between our fiscal, monetary, and I must also add our trade policies at this moment. For you now, what does a full alignment look like? And then when we are looking at the inflation targeting strategy of the Central Bank of Nigeria as a whole, where do you see the numbers print for the year 2026, especially on the back of the fact that we know the budget is also hinged here? Your take around expectations for the budgetary assumptions and how the 2026 transition year as a whole might likely throw up fresh risks or concerns?
Okay, I would say it's going to be scenario-based. Yeah, so would expect, if the borrowings that we see and the gap in the budget and the financing is not significant next year, we think that interest rates will come down further from this level. It means government will not be too desperate to raise funds in the market and will prefer to pay less. Secondly, when we look at the FX environment, we think that based on the gains that have been made so far, may also government or the CBN would like to just keep it around this level, if not achieve a bit of appreciation. So we don't expect any major volatility. Once we're able to survive this period, there's always a lot of demand. Once we're able to survive this demand, December, January demand, then it shows a bit of confidence and speculations will reduce. But by and large, there's always a need for a sync, for a balance across both the fiscal and the monetary authorities. So the monetary authorities have been trying to see how they want to keep rate very attractive, while the fiscal authorities are trying to see how they want to borrow at a cheaper rate. But there's a need to meet at the middle point, and it is the strategy and the gap in the budget that will also help the CBN to see what should be expected. And we think that once there's a sync and there's clarity, which is critical for business growth, then we think that 2026 will also be a better year. And inflation, lastly to your question, would be printing almost towards the single-digit levels.
Yes. And if we were to take cues from the likes of Ghana, which also has the eye of investors at this moment, achieving single-digit inflation quite fast, what would be that biggest cue? What would be your recommendation to hasten the disinflation trend even further?
So I think the first thing is insecurity. So food inflation is still a major concern, and with the escalating insecurity in the last few weeks, there's a need to curtail that. And also now build infrastructure, moving things from the north to the south. If we build enough rail system that reduce cost of goods, that will cost of items. And once we are able to achieve that, there's stability in the economy. We think that on a month basis we would see more gains, and that would even give more confidence even to the CBN, and we begin to see a major cut. Once they see that the month-on-month is also very stable.
Okay. We'll leave the conversation here for now. Thank you so much for your time. That is Ayodeji Ebo, Managing Director of Optimus by Afrinvest.